Have you ever wondered how much Tesla stock will be by the end of the year? There are a lot of predictions for the EV company's stock price by the end of 2022, both high and low. You surely do not want to miss this. Gary Black isn't short on opinions about electric vehicle pioneer Tesla. Black is a longtime Wall Street executive working as a Wall Street analyst and fund manager. Gary Black is the managing partner and co-founder of the Future Fund LLC, an SEC-registered investment advisor focused on investing in growth equities of companies that are changing the world. Gary has extensive experience spanning nearly 30 years in top management positions at some of the most well-respected global investment management firms. According to Black, Tesla's market capitalization should be $4 trillion, since it is currently worth $1.09 trillion. On $100 per share earnings, he allocates a 30 price-to-earnings ratio, which results in a $3,000 price target. He added that if 1.4 billion shares were outstanding, Tesla's market capitalization would reach $4 trillion. Black further stated that electric car penetration in the automobile industry will reach 60% by 2030 and that Tesla will have a 20% share of the EV market. He believes that by the end of the decade, Tesla will be able to deliver around 10 million vehicles per year, given that worldwide light vehicle sales have reached 85 million units. Gary Black says Tesla shares could hit $1,600 over the next 6 to 12 months. The Future Fund's portfolio manager sees several catalysts for Tesla in 2022. Tesla is expected to grow sales by over 50% in 2022, which Black says makes it a cheap stock at 50 times earnings, his forecast for 2023. However, following the 3-for-1 stock split in August, Black set a $500 price target on Tesla stock. Similarly, Wedbush analyst Dan Ives changed his price targets for Tesla stock from $1,000 to $306 post-stock split value. The EV company's stock has significantly dropped in previous months following the halt in production at its Shanghai plant in May. This was mainly due to supply chain issues leading to a series of difficulties at the factory. However, Tesla CEO Elon Musk is confident that Tesla can produce a record number of electric vehicles in the rest of the year. Still, there may be unforeseen challenges on the horizon to consider. Although a piece of really great news for Tesla stockholders came when American car rental company Hertz announced its massive purchase of 100,000 Tesla Model 3 vehicles. With that, Tesla bulls expected to see a surge in the company's stock price, which happened, but unfortunately not for long. Still, Hertz announced its plans to take deliveries of the 100,000 Model 3s by the end of 2022, and added Tesla Model Ys to its growing electric vehicle fleet earlier this year. Moreover, Hertz also made a deal to offer 50,000 Tesla electric vehicles to Uber drivers. The car rental company has been increasing its Tesla vehicle fleet, which will further boost Tesla's popularity and open it up to more users. On a different note, Musk announced Tesla's plans to release new updates on its FSD feature by this year. Earlier this year, Tesla released FSD Beta 10.69, which featured several significant improvements from the previous one. Soon after, the company released a new version 10.69.1, which came with more features. Musk mentioned that within the month, Tesla plans to release FSD Beta 10.69.2. Through his Twitter account, Musk explained that this next and potentially final version still needs to be polished, and although it will feature a significantly smaller amount of code changes, their effects on the driving experience are going to be significant. Other experts revised the Tesla stock forecast lower to $398, mainly due to increasing concerns for the global economy. Tesla's post-split price target by New Street Research is $530, Morgan Stanley $383, Argus analyst $374, Berenberg analyst $290, and CFRA analyst $415. Overall, $398 is the Tesla stock forecast post-split 2022. According to some, Tesla stock is likely to lose value over the next few weeks as global uncertainty appears to be rising. Inflation is likely to rise higher as crude prices have risen 10% from the monthly bottom in August. Moreover, the Ukraine conflict has pushed most European economies to the brink of recession, with increased concerns around the availability of heating during the winter. Also, China's property market is in a serious crisis, with potential domino effects on the financial sector. Growth numbers have been halved, and with so many loose ends, Tesla's 104 PE is unlikely to be sustainable. Still, experts are optimistic that there will be more clarity on the global economy over the next 4 weeks. Some negative factors for Tesla are interest rates and other economic factors, competition, as well as regulations, fees, and fines. Fears of increasing interest rates and the Fed announcing bond tapering, changing the mentality of retail investors to book profits in high-growth stocks and shift toward less expensive ones. This might impact Tesla's forecast for 2022. While Tesla is the undisputed leader of the EV market in the world, a range of competitors is lined up to take a bite out of Tesla. Ford, NIO, Lucid, and Rivian to name a few. Still, many believe that Tesla at this point in time remains to be at the top of the electric vehicle industry. Still, Tesla has not been much of a darling of regulators lately, which could mean trouble for the automaker. There may be various fines and fees involved and potential scrutiny in the expansion plans of Tesla, as China's plan is not liked by many in the US, and increased regulatory scrutiny affects the cash flow and production efficiency, to say the least. However, there are also positive factors for Tesla, including the Starlink project, the company's aggressive production, newly opened gigafactories in Austin and Berlin, as well as its ties to China. For the past years, Elon Musk has been working on the Starlink project, intending to provide the internet to the remotest spaces on Earth through a network of private satellites in orbit. It picked up pace in 2021, and Starlink now has more than 2,000 satellites to boast. Musk, through a Twitter post, said that Tesla shareholders may benefit from the Starlink IPO. China is a huge market for Tesla and EVs in general, and according to estimates, China will represent 40% of deliveries for the EV maker in 2022, contributing nearly $400 to its share price. If China's market is handled properly, it could be a big tailwind for Tesla. The recently opened gigafactories in Austin and Berlin aim to provide a big boost to production. It will increase the global presence of Tesla and increase its capacity to produce 2 million units annually from roughly 1 million units today. In the last year alone, Tesla's share price has rocketed upward by more than 700%, delighting Tesla investors and loyal fans. Since the company went public in 2010, its shares have ballooned more than 20,000%, comfortably outpacing the market as a whole, consistently obliterating Wall Street's expectations and turning early investors into millionaires. Tesla's growth has inspired confidence. After struggling to turn a profit for years, Musk's automaker just closed out its 6th consecutive profitable quarter and its first full year in the black. In 2020, the company beat Wall Street's delivery estimates in multiple quarters, produced more than 500,000 vehicles, and began selling its 5th production vehicle, the Model Y, ahead of schedule. Despite all of those potential upsides, many experts argue that the frenzy surrounding Tesla is nothing more than a bubble that will burst sooner or later. By conventional measures, they point out Tesla's valuation is completely out of whack with the rest of the auto industry. It has a price-to-earnings ratio (PE) of 1,200, meaning that for every dollar of earnings, Tesla enjoys $1,200 of market cap. For comparison, Ford's PE is 22.74, while General Motors is 17.84. Wall Street analysts skeptical of Tesla's valuation noted that Tesla's margins aren't vastly different from the rest of the industry, and that Tesla is bound to face increasing competition from other automakers entering the EV space. But industry watchers are split about Tesla's prospects. Some predict it will soar even higher, while others urge investors to avoid it at all costs. JP Morgan analyst said the stock is driven primarily by a speculative fervor. In a note to clients late last year, you can play with the numbers any way you like, but one or the other of the required assumptions still seems very difficult to conceive in any imagined scenario. The analyst said, Tesla shares are, in our view and by virtually every other conventional metric, not only overvalued, but dramatically so. Overall, there are varying valuations for Tesla stock, but most are leaning toward a lower valuation, due to global economic issues that are affecting the overall stock market. Subscribe to this channel to see what the Tesla stock price at the end of 2022 will be.